Julie Ann, I know there are at oftentimes some negative stereotypes or negative connotations as it relates to funding partners. Why do those exist?
I think the first is owners believe it's a sign of weakness to have a financial solution in place, especially a funding partner, not a traditional bank line. There's so much negative due to some of the different options out there that are very expensive, but they're expensive for the reasons that an owner needs to do that. Their credit isn't strong enough. So I get that, but not all their options out there are pricey. They're very similar to financial solutions with a bank. So I think you have to look at and go, do you want to miss opportunities with your business? Do you want delayed payroll? You don't want overdrafts in your account. You don't want to hold back and go, oh, I can't grow with this company or this opportunity because I don't have a financial solution in place. So it's not a sign of weakness. It's actually a smart strategic initiative to do. And so I think people need to get rid of that. It makes you look like you're not strong enough. Your balance sheet isn't strong because you're using a financial solution.
It's definitely a way to enable growth, right? And
Right.
I hear what you're saying. And at the same time, though, a staffing firm's clients wouldn't necessarily need to know that they're using a funding partner, right?
Exactly.
So then you're getting the support you need, and you're getting, I like to relate to it to coach, right? Like you have a coach in your corner who is going to help you get to the next stage of your business. It sounds like a win to me.
It is. It's just finding out the right solution for the right timing of your business. When you're a startup, you can look at your own personal capital, but that's tying up a lot of capital. It's risky and it's limited for your scalability. So look at a line of credit. Well, a line of credit, if you're a startup, that's really tricky to get because most businesses or most banks they're looking for hard assets that you don't have yet. And there's balance sheets requirements and different requirements that are traditionally very hard to get as a startup. So most people will look at traditional ABL lending or factoring for a startup. But even if you're in a growth mode, again, traditional banking doesn't like that growth mode. They like a very stable marketplace for them to do lending. They also like a stable industry. And right now, as you know, Brad, we're not in a stable industry. So a lot of your banks are pulling back those lines. So again, you have to understand all the options out there. There's probably 5 options out there for an owner besides, I'll say 4 besides your own personal funds, which then are tied up and you can't utilize them for anything else.
Let's walk through that a little bit. So if I am in growth mode and I know that I have a client where I'm going to need that money quickly, right? I need to make payroll. I know that we're in growth mode for a current client of ours and I need a funding partner because I know that I'm not going to be able to sustain this growth with this potential client. What would the best option be for me in that case?
You're going to have 2 options. You're going to have an ABL, which is asset-based lending. They're lending on your assets, which are the receivables, which is less expensive than the other alternative, which is factoring. Factoring, you're actually selling your receivables to a company that will advance your funds. So does an ABL. We both advance at 80 to 90%. Factoring owns the receivable. They're not much in the background. They have their name probably on your invoice. They usually set limits per customer, which can strap you if a customer is starting to grow. They will also look at credit per customer, where an asset-based lender is setting a limit per the portfolio of your business. So if you're at maybe $1 million in an aging, they may set you at $1.5 million as a line of credit. And then as you grow, they grow with you. Both of them will grow with you. But one is more restrictive as it's setting a limit per client or customer, where an asset-based lender is a total portfolio limit. So more flexibility in one and the other. You usually need a factor if you have poor credit, your financials aren't in line, or you don't want to show financials or don't even want to present financials or don't have them. With an asset-based lender, you are going to have to show your financials, but they are not balance sheet driven like a bank is. So there are some restrictions. Both of them don't have much in covenants, where your banking will have covenants such as how much can you pay yourself? How much can you take out of the business? How much can you spend on equipment and that? So you have to really understand them and lay them all out. Pros, cons, what is going on with your business? What are you trying to take your business, the trajectory of your business, and then select the best solution for you.
And then you started to allude to in startup mode, that might be
Mhm.
a different kind of funding partner. If I am a startup agency, what might I be looking to do?
You probably are in the same as a startup with either a factoring or an asset-based lender. They will have requirements after a period of time. Most of them will, meaning you'll have to start funding at least a minimum after maybe 3 months or 6 months. But again, lay that all out, find those questions. I think it's really great to set a standard set of questions that you lay
Yeah.
out and you ask each provider and then dig in. When they say, well, here's your rate. Well, really, is that all the fees I'm ever going to be charged? Can you tell me everything I'm going to be charged? And then lay that out to see really what the cost is for you.
What might some
Okay.
of those questions be? So whether I'm considering working with you or somebody else, what questions should I, the owner of a staffing firm, be asking a potential partner?
Great question. I think, first of all, how quick is it for me to expand my line of credit with you or my lending with you? Is it 30 days? Is it 3 days? Is it 24 hours? How quick is it? What are you going to go through what are the steps that you take before I get funded each week? Do you have to verify the receivable? That's in factoring. Most lenders don't do that in asset-based lending or your traditional bank lending. What are the clearance delays with when a payment comes in? Do you apply it and stop that clock today? Or is it a 3, 5, or 7 day clearance that I'm paying additional interest on? What are the other fees all involved? You're saying that there's my base fee is this. Is there daily? When does it kick in? And how long will you fund me for? Is it 90 days or is it 120 days? And do you have concentration limits? Meaning, if I have a client that is 50% of my portfolio,
Yeah.
will you still lend me? Or if they're 90 days on 90% of my portfolio, are you going to restrict my lending ability based on the terms I have with that client? If my client sets 75-day terms, will you still fund me for the full time? So those are a general set of questions. Of course, there's many more. Based on the answers you get, you might want to dig in more, qualify it, and dig in more.
Yeah, walk me through sort of the book of business. So if my client base isn't diversified and I do have 90% of my business with one client, why is that more of a risk than if I am diversified when I'm looking for a funding partner?
Well, high risk because one, if that company lets you go, you're basically only have 10% volume now.
Sure.
Two, if they go bankrupt, file bankruptcy. So, and if their credit just changes and the business structure of them changes. So
Yeah.
it is a high risk. I've seen it, if you're talking about Fortune 500s and that, you're fine. But in a company that doesn't have a lot of experience and a lot of credit history, you're going to get limited and you're probably going to get into factoring then. We lend as an asset-based lender 90%, but we're lending a good solid company that has better terms than I would say 75 or 90 days. But you get into these situations where somebody will say, well, I'm 90% in a VMS, vendor management solution, MSP.
Hmm.
Well, that's okay. It's spread out with end customers. It depends. You see that traditionally in healthcare today. There's a few vendor management solutions, MSPs out there that will really control the healthcare. And we're comfortable with that because the end customers is different. But again, when is that managed service provider releasing those funds? Are they releasing them in 3 to 5 days or a week? Or are they
Hmm.
holding them longer than that? That's all going to play into your financial solution and who's going to be a great partner for you or not.
What else should the owner be thinking about as they're thinking about finding the right partner for them?
So many owners wait until they're cash strapped. They really wait to the last minute. And I
Yeah.
think that's unfortunate because sometimes how can you do your exploration then? So
Right.
know what you're doing, what it looks like for your ramp up. Is it going to be 6 months? Is it going to be 3 months? Or are you working on a bid right now that's going to take you to $100,000 in billings or $300,000 in billings? You have to have those partners in place and build that relationship ahead of time so that when you're ready, that you need it, that you can immediately get into that partnership right away.
Yeah, I think the challenge there is I know we're on a 4-year decline in the industry, right? And I know
Mhm.
we were just at Staffing World and it doesn't seem too optimistic. I think they're trying, but as an industry, it's no secret that the industry is a challenge right now. So when you're thinking about where you're going to be this time next year and you're trying to forecast, yes, you can plan. Yes, you can put the plan in place to hopefully get to a point where you want to be in your business. But I think the challenge there is I don't know necessarily the line of credit that I might need this time next year. So, Julie Ann, what you're alluding to is having the right partner who says, okay, well, here's where I am now. Here's where I want to be. Can we have the right communication where if I need the funds when they happen and when I do need them, you're here to help me as I grow?
Exactly. And not paying for that line now that you don't
Right.
need.
Right.
Because in certain situations, you will pay for just to have that line, and you don't want that. You want a funding partner that's going to grow when you grow, so you only have to pay for it when you need it. I also think you brought up a good point. Because the industry's been down, there's so many solutions out there that come into this industry and leave this industry. They don't know it. So I would look for a partner who is industry specific, that really gets this industry, because we have our highs and we have our lows. And it was really interesting in 2008 when we went into the recession again and IT lending got really tight. You would see $2 million lines of credits get pulled down to a $500,000 line. And that was unfortunate for those IT companies, or even less, or lose that line. Well, we get the industry. So I told our salespeople, go after that industry right now, go after that sector, IT, because we
Mhm.
get it and we can move that line as they need it. And so that's what we really focused on back in 2008 and 2009. And even after COVID, understanding that we were going to come out of it first and that we would come out strong. And we did. So I think it's really imperative that owners look at an industry that is similar, that knows their industry, a partner, I should say, that really knows their industry, and stick with them. Because somebody coming in and out is going to do
Yeah.
that again to you. They're going to pull it back or get out, or, say, well, we're done with, we're not renewing your line. So really look at that.
Yeah.
I think it's critical.
Hey, it's Brad taking a short break to tell you about my friends at MJA and Associates. For over 20 years, they've helped staffing firms just like yours save serious money by identifying and claiming federal and state tax credits, such as the Work Opportunity Tax Credit, handling the entire process from start to finish. The best part? With their performance-based pricing, they only get paid when your business saves. No setup costs, just real savings. Stop worrying about the Work Opportunity Tax Credit and let my friends at MJA and Associates do what they do best. To learn more, visit mja-associates.com. That's mja-associates.com. All right, let's get back to the show. I think it's interesting. We do that with health, right? If you need help with a very specific part of your body, right? You go see a specialist. You don't go to a generalist when you're absolutely needing surgery on something very, very critical. You go to a
Mm-hmm.
specialist. Yet
Mm-hmm.
we often look for a partner or a vendor who might be a generalist in our business because we don't play the same game as it relates to our personal health and wellness and well-being.
Mm-hmm.
And I'm in your team of, find a coach that's right for you, that has a track record that can support businesses like yours that has done this, right? If you're looking to grow, you want to find somebody who has helped other companies grow. You want to have a partner who can be there because they've done this already in the past. So yeah, I couldn't agree more. Julie Ann, I am curious, and this kind of pivots a little bit from the funding side of the conversation, but you have your ear very close to the ground as it relates to staffing and recruiting. I know I run into you at just about every conference that I'm at. I know you've been in the
Mm-hmm.
industry for a little bit now. I won't say the number, even though you just told me ahead
Please don't.
of recording. I will not. Where do you think the staffing and recruiting industry is going to be this time next year?
I think we're really going to come out of this in the first quarter of next year. We're seeing pockets of it already in fourth quarter, which is really encouraging.
Mm-hmm.
Because it's been a long time. I felt like it was going to come up. Everybody said at the beginning of the year, third and fourth quarter, and then we got into third quarter, and we finally and we actually retracted again. And
Mm-hmm.
now we're coming out, and I'm seeing now even manufacturing clients, light industrial, where they're starting to pick up. It's not like the traditional where you would get a large order, but if you're getting 10 here and 10 here, 5 here, whatever, it's starting to pick up. So I think first quarter, we're going to start to see it and we'll see growth go throughout the year. It's just been a very unpredictable year. And I think people are just reacting to it, meaning our business partners out there that the supplying companies, the staffing companies are supplying to are just very uncomfortable what's up and what's expected to come. And, but I was on a meeting this morning with a economic indicator, and he was an economist, I should say, and 95% is what they're saying that we're going at rate that we will have a cut this week from the feds. It's what it's sitting at. It's 95% probability. With another one in December, 95% probability. I haven't heard that solid since we start going down. So that's great for our industry and for the economy to see that forecast coming through. Now we'll know Wednesday because that's when they meet, and it'll be great to find out but it hasn't been that high of a probability. So that will help our industry start the trajectory of positive. So, and I think people learned to pivot later this year, but they looked at different options of what they can do as a staffing company and how they can present themselves to their customers or other opportunities. So, we work with a lot of clients. I just had a meeting last week in Atlanta with owners, and we were talking about how to pivot and what other things can we do to grow our businesses.
Yeah.
And it was very promising, and then we came out really energized. And I think that is what the indication is for 2026.
You mentioned you're starting to see an uptick in manufacturing. Are there any other industries on your radar that are starting to, I guess, turn a page?
IT has been upticking in certain industries, certain types of IT. And then, of course, parts of healthcare have been definitely on the upswing. We don't do a lot with hospitality and, like, I would say conferences, but that has always been strong throughout the year. But again, it's whoever is working with those types of industries. I think their problem is finding the candidates to fill those jobs for hospitality. That's been really tough for them.
Yeah. Thinking about, I want to ask you, because you do go to quite a few conferences and you do have the opportunity to sit down with quite a few clients and prospects. What's on everybody's mind right now?
The tariffs.
Yeah.
That's all I hear. And I'm like,
No
don't
secret
ask
there.
me. I mean, I can't predict that.
Yeah.
The tariffs have been really on everybody's mind in just the world and what's been going on in different countries with war and things like that. I think if you bring it back home, back to United States and not the tariffs, it's just a lot of talk of AI. How is it going to impact staffing? What should I be doing? I think if you don't have AI in your staffing world right now, boy, you're behind. You're really behind.
Yeah.
We all use AI in some way, shape, or form.
Mm-hmm.
Utilizing it to streamline applications, but not. You have to be careful. You don't want to weed out applications either. That because of biases that the AI doesn't understand.
Sure.
I think getting AI involved, as I'm sure, speak about all the time, is really critical. But don't be at the bleeding edge of it, but get on the beginning. You have to be up there with AI. So
Yeah.
that was what the messages I saw at ASA at Staffing World was really AI focused. I'm sure you did too.
I have not been able to go to a conference and not hear AI all year. I think I
Right.
went to 5 this year. It feels like every session is some sort of AI driven spin to it.
Right.
And rightfully so.
Right. I'm shocked people say, no, I'm against it. And I'm like, wow, you're going to be left in the weeds.
Yeah.
You know?
It's certainly, yes. I think the companies who are choosing strategically to not involve themselves with AI in advanced technology, I have a hard time believing they will be around for a long time. It's just at the ease of efficiency and scaling and using AI as a teammate. Joey Frampus, who's a friend of the show, he's been on the show before. I saw his talk at Staffing World, and I know you're good friends with them too. He had mentioned that AI should be seen as a teammate and not just somebody who does the work for you, right? So I would never, and the example he gave is I would never say, hey, Julie Ann, can you write this email for me? I don't know what to say to this client, but I might instead say, this client's frustrated right now. This is the first draft of how I will respond to them. Can you review it, give it a look over, make sure that I don't have any negative undertones in my message, because I am frustrated back at them, but obviously I'm not going to say that to that client.
Exactly.
But can you read this, review it, check it for me, and make sure it's good? That's the approach that I've been trying to implement AI, and I borrowed the framework from Joey on that one. I think that's the perfect way to use it. How can it work alongside me to make me better, faster, stronger?
Right, right. It's funny. I had this discussion with my husband last night. He was writing something for an article, and I said, utilize it to get the negativity out of it because it sounds a little, you might be a little bit more stronger on this area. And he goes, really? He goes, it's only changed a few words. I go, I don't. That few words brings that tone down, and that's what you want to use it for, not to write your speech, not to
Right.
write your article, not to write your email. So
Right.
that's what I do exactly. When I'm upset or when I need to come up strong, but I don't want to be so strong that's negative, I utilize it to get that tone down. Because sometimes when you're in the right, not in the right mode of
Yeah.
your mindset, then you're like, oh, I better use it to tone it down.
Right.
Yeah, it's interesting. I think it's great. I use it for vacation planning and everything. So yeah, it's a great
It is
tool.
it's an interesting tool. I use it. One of my favorite use cases is actually for our family calendar for meals for the month. I built out a GPT. If we're going to talk AI, I can talk AI all day. I built out a GPT. So it's me and my wife, and then we have two little kids at the house, a 3-year-old and a 1-year-old. The 1-year-old will eat whatever we give her. She's a bottomless pit at this point. The 3-year-old's a little picky. But I know. But what I built is basically a GPT based on all the parameters of what we like in a meal, the macros we want to be around. We know when we're busy. We know when soccer night is. We know what we want to do. And then I can just put in the month and it spits out some ideas built on a calendar. I mean, I love it for that. And yes, certainly using it at Haley Marketing as well to help with the day-to-day and some of the things that we're doing over here. But big fan on the meal planning because I don't want to think about what we're going to eat every night. That seems like a
That's
wasted
great.
task.
That's great. I love it. Yeah. And I'm a big fan for planning my vacations with it. And
Yeah.
where should I go? What are the top spots I should go to?
Yeah.
Must see. You just have to keep on asking different questions to dig into it. So it's really cool.
Correct.
It's really cool. I never thought is I should go out there and say, what are the best funding solutions? Don't go out and do that. But no,
Yeah.
how to utilize them. But it's funny because I tell owners, funding depends on the growth stage you're in, your appetite for risk. How quickly do you need to turn your receivables into cash? What's important for your next, 12 months to 24 months? And really look at those options. But I can't stress enough to dig in to really what are they offering? What is the solution? What is their knowledge in the industry? Can they help you? We were talking just now. How much of a resource are they going to be just to help you
Right.
strategize about your business? And I spend a lot of time with clients just strategizing what they can do with their business and what my gut feel is on if they pivot this way and how do I think they should look at that. So really are they a partner or are they a vendor? And I'm never going to be a vendor, but I'm going to be your partner if you want me to be your partner. So I think that's really critical to business owners,
Yeah.
and it's not a negative. You have to get away from that shows weakness in your business if you use a solution. If I'm working with a $200 million staffing company, I don't think that shows weakness at all. And I have those in my portfolio.
Mhm.
They have opportunity to grow or scale it back from me with funding. And those are the solutions that you want. Can we scale it back when we don't need the money? And can we go and say, hey, now I need more money? So really understanding those solutions out there, and what is the best for you as a company.
I think that's important. So walk us through that because you had mentioned that one of the biggest priorities is knowing where you want to be 12 to 24 months from now. If my business is going to grow, but then things happen, we lose a couple clients and we go back down, we grow a little bit more, we go back down. What does that conversation look like between you specifically and a client as they're going through those ebbs and flows? Is there an open line of communication saying, listen, we don't need this line of credit anymore, we need more? How does that conversation even happen?
Yeah, well, I monitor their usage first of all. So if
Okay.
they're getting close to a certain percentage, I kick it in right away so that we are already proactive and within 48 hours saying, hey, we're sending you a line increase because we see you're at 75% usage. Just did one today. They're at 80% usage. They're growing. We did reach out to them to say, hey, we're seeing your line usage went up. What's going on? And he's like, yeah, we've got this client. We just signed another one. So we
Awesome.
talked to them to find out, well, what do you think you need? What do you think your volume is going to be at each of those entities over the next 60 days, 90 days, and then later? And then we plan together, well, if you're going to be at X now, and then in 6 months, you're going to be triple that, let's give you that line usage now so you have it there because it's not costing you if you're not using
Right.
it. So we're really proactive in that. And I think that's truly what a partner is proactive. I always tell the clients, if you have a bid coming that you're doing and you think you're going to win it, you're close to winning it, call us ahead of time so that we can talk through that so we know what your needs are. And then once you get the go ahead, let me know and we'll increase that right away. But again, we have a very quick turnaround. If you're looking with a financial partner like a bank, you're talking 30, 45, sometimes 60 days because they have to go to a board and get that approval process.
Yeah.
Where I already know your business and I'm like, oh, I know your business. You're a strong business owner. Your business clients are really strong. We have no problem. So I can't even remember the last time I said to somebody no, because if we know what's going on in their business and we're already helping them develop that. So you really should be having those conversations. There's nothing wrong with calling your funding partner and said, hey, I'm not going to need you. How can we scale it back? What do you suggest where I can save some money? And I have no problem saying that. Go, yes, let's not fund this client of yours. Now, you can't do that in factoring because factoring, you have to fund everything. Again, that's understanding your options out there. Do I have to fund everything or can I just fund a couple customers? So you'll see that traditionally in the end of the year, toward the end of the year, most clients will hold back their funding. But then you get into January, all your taxes reset, your FUE, your SUI, all resets. So your gross margin goes down because now you're taking out federal unemployment, state unemployment until they hit their limits. So they need more funding. And it's also tighter. Sales are usually down in the first quarter. So you see funding grow then, and then they pull it back. So you really need a partner that can move with those ebbs and flows of your business.
Yeah, and having somebody that has done it, that has worked with companies like yours, that has seen ebbs and flows of the industry speaks volumes.
Right. I mean, Tricom's been in it 36 years, so it's a long time that we really understand this industry. And it's the only industry we serve. We love it because it's helping not only staffing owners, but it's people you're putting to work. You're helping them. That's your end client. Those temporaries going to work or those contractors going to work every day. They rely on us to fund our clients.
Julie Ann, before I let you go, anything that you wanted to touch on as it relates to funding and making the right decision with a funding partner that you want to speak on?
I'm open to help anybody, even if you never work with me, to educate you. So you can reach out to me or reach out to somebody, get someone who's knowledgeable in all of these areas to help you lay it all out, to navigate it. And don't be too proud to ask a lot of questions because there is a lot of misnomers out there. And if you don't ask the question, I can't believe how many people sign contracts that they haven't read the contract. They were told one price and now they got something else. And they were told it was only going to be this long. So it's unfortunate because that shouldn't be in the industry. I don't operate that way. We all shouldn't operate that way, but there are bad ones out there. So really understand your solution that you're looking at and don't be too proud to ask people for advice, even if you don't work with them. I think that's what we all should be here, is out helping everybody.
Very good. And a little bit about Tricom before I let you go. Go for it.
Tricom. Well, as I said earlier, we're an asset-based lender, 36 years in the industry. We lend, we also do back office processing, but you don't have to use us for that. So we can do all your payroll billing, accounts receivable, accounts payable, and financial statements. And like I said earlier, we really partner with our clients to help them grow and offer different solutions. Like we have a client conference that's free to them, and we do podcasts like this, and I send out newsletters, and I'm really trying to educate clients on the industry because so many of them, unfortunately, don't go to a staffing world, don't belong to their state associations, which I really believe you should belong to your state association. It's critical. ASA is helping you keep your business out of legislation. And so those are my last ending points.
Hey, it's Brad taking a short break to tell you about an offer exclusive to listeners of Take the Stage. 30 minutes of strategic marketing consultation with me, completely free. Hey, whether you're looking to drive more sales or more job applications, I want to help. Visit bit.ly/stage offer. Pick a time that works best for you. That's it. Again, whether you want to drive more applications or more job orders, I want to help. That's bit.ly/stage offer. All right, let's get back to the show.
Very good. Before I let you go, our quick rapid fire round. One book that has fundamentally changed your life.
Good to Great. Good to Great. Love Good to Great.
Yeah. I've read it over here as well. We read it a couple years ago. I'm probably due to refresh on that one, but yes, very, very good book.
Yeah, I made all my management read it. Yep.
Very good. Very good. And one piece of advice that you would give to somebody just starting in the staffing and recruiting industry, what would you tell them?
Get yourself a lot of mentors around. Find people who are been in the industry who want to mentor you or educate you on the industry. There's not enough that you could read on your own. I think it's so strong. Us all partners sharing and helping people grow. So, and I found that at Thrive, that women's conference is amazing because we're out there helping other women. So the same thing, if you're brand new in the industry, you need to get yourself connected with people in the industry to help you with your business because you won't have all the answers and you won't find them on chat for sure, all the answers. You just really need to get other people's experiences that have lived through it. And most of us want to help each other. We really do.
Julie Ann, I'm sure I'll run into you at a conference sometime soon. I'm done for 2025, so it's going to probably be in the spring. Always fantastic talking to you. I appreciate you coming on the show and sharing all your insights with us.
Well, thank you. Thank you very much for inviting me. I appreciate it. It's always great to see you and talk with you.